What's up, everybody? Michael Silva here. Welcome to another episode of the Stock Market Brief Show, coming to you at Wednesday. It's August 23rd. Excited to get in today's episode. We got a lot to talk about. There's going to be timestamps in the description below. We're going to go over the Dow Jones, Russell, some key levels there, the S&P 500, many indicators, and then we're going to go over some intermarket stuff as well and cover a snapshot. These episodes are brought to you by my Patreon community. They are the ones that support me. If you're interested in that, make sure to click the link in the description below. I don't label everything that I have in there. I did just recently add a whole suite of tradie ticks there. So only $9 a month and you get access to all their awesome Discord stuff there too. I'm also partnered by Bookmap. If you remember this chart from yesterday, we're mapping out some key levels. Pay attention to these levels right here because you can see as it updated, where did price come to? It came right into that level, and we still have those levels above and below us. This allows you to see behind the candlestick, see the order book, and visualize it in heat map form. They offer my subscribers a discount, and then also partnered with Interactive Brokers. If you click that link, make sure to check out their campus too as well, because they offer a lot of free content, classes, webinars, blog posts, and even a podcast there too as well. We're going to get into it today looking at the snapshot of the market. I know it's on everyone's mind. NVIDIA, right? NVIDIA reported after the bell. This was the earnings expected move. We posted that in the Discord community and on Twitter just to give you an idea of where the market was pricing in forward-looking risk. And you could see we came into it, and when we got onto the call, you can see that the market started pulling itself back a little bit. We don't know where this is exactly going to open. I personally did not trade this, so we will see here what the open looks like come the morning, but I can show you what it looked like to be a bear shorting into that. This is Coco Bear. She told me to short last earnings, and she told me to short this earnings. Just playing around. If we take a look at the 11 sectors that make up the S&P 500, a lot of green on the board today. Energy was the one that was lagging. Could be because oil there was down. All the index products looking healthy overall. Now, what really drove this? Well, there's something interesting here at the market view. If you take a look here, this is day percent change, and I stack ranked it the highest percent up. These are just the things that I kind of keep a close eye on. It includes the 11 sectors, includes the Q, SPY, and all that good stuff. But take a look here, what led the way. That's GDX, that is miners. We've been preparing that one for a couple of days now because we've been pointing out some very oversold conditions. So see that big bounce could be the start of a potential strong move, but it's not necessarily the stuff that I like to chase into if you didn't prepare yourself, obviously, for that. The next one on the board there was TLT. So yields obviously came down. No surprise there, right? They've been on the monster tear. So take a look here at the laggards. The TNX was down 3%, which is the 10-year yield, and take also a look at UUP, the dollar. So we've been saying if the dollar goes down and if yields goes down, that could help get the market kind of back on its feet or see a potential bounce. We've been seeing a lot of oversold conditions, and now we're starting to see some relief rally. The question kind of still remains, hey, how much gas is in the tank on this rally? And we'll be talking about that here in today. If we take a look at the heat map overall, a lot of green on the board. You can see healthcare, not the greatest looking sector, obviously, overall, and then energy there too as well. If we take a look at the biggest gainers from a high market cap perspective and the biggest losers from a high market cap perspective, we have stuff like SHOP. Actually, I'll show you a couple of charts here. So SHOP did see some nice volume today, breaking out of a descending, broadening wedge, which means that we could potentially still have some upward momentum, maybe to around that 60 marker as that MACD is starting to curl itself over. Maybe not the place to chase, but if you go into a smaller time frame chart and see a little tight consolidation, you can maybe play it up a little bit higher there. Another one there was SPOT on the leaderboard on big mega cap stocks. The MACD also is curling here. We broke out of this falling wedge with some volume coming in. So, hey, is this the start of potential a move to try to strike back to 150, a little bit of relief rally, or potentially even come to fill this gap at around 160? So we'll see how that one shapes up there too as well. If we take a look at Nike, this one was one of the biggest losers on the day. I believe it was the biggest loser from a market cap perspective. What's crazy here is we've seen 1, 2, 3, 4, 5, 6, 7, 8, 9. This is the 10th day in a row. So the first time, I believe, in Nike's history to have 10 trading days to the downside, now trading under 100. We did see just a monster amount of volume. So is this potentially capitulation? And are we going to see a little bit of a relief bounce, maybe to 101, or potentially even back up into that 104 area as the RSI is getting to pretty oversold conditions? Now, this could be led because on the mid cap market, which are still some big names, we're talking billion-dollar market caps, Foot Locker was the leader there, coming in at 28%. So this is just a complete crack to Foot Locker over there. So this could be something, I mean, if you're a long-term investor and you're looking for value, potentially here, but just know that chasing 30% down draws, I mean, it takes a lot of time to recover these type of moves. I looked at the chart, I don't have it here, but I know that it opened at the low and it closed rather at the high. So perhaps we do get a little bit of a little bounce or something, but just be careful there. AMC, another one that got clobbered today, 23%. So that thing is just getting smoked. And then Peloton, another one. This was a meme stock, pandemic stock, and that thing was down 22%. I believe it was on earnings for Peloton and Foot Locker there. I can't remember if it was AMC earnings. Now going into tomorrow, we got durable goods. Okay, that's going to be an hour before the market opens. And then we also had Fed Chair Powell coming out and talking on Friday. So just know that the market is still, going to be potentially pretty volatile. Let's take a look at some intermarket perspectives here. You can see here the 10-year yields backing off. It was a monster run up. Minus 3% on the day, so it's backing off a little bit. No surprise there. Did we reach the top in yields? Well, it's very possible. The reason why I say that is because I finally locked in my mortgage rate. So we'll see what really goes on there. Now, I want to call out here TLT. This is just a massive move. So is this just a bear market bounce over here? Be aware of this. This is just an incredible move. 2.48%. We were talking about the positive divergence on the RSI building. The price percent oscillator is starting to flip itself back up. We had a positive divergence there on that histogram. So are we going to come back and backtest this declining 20-day moving average, this declining 50-day moving average, and this prior area of resistance? So it'll be one to watch. This could very well just be a relief bounce. Maybe we take a little bit of a cool off, try to potentially form maybe a inverse head and shoulders, and then break up through that and higher. It's going to be obviously one to continue to watch there. Not something necessarily that I would chase. We kind of, and back to that is this yesterday's video or the video before, we were talking about how if you're looking for potential longer term value, you can look into areas like this to potentially add to, and even lower, where around 80 was even higher amounts of support. That was prior resistance there too as well. And you get the benefits of the yield and potentially the equity itself going up as well. Now, if we take a look at the 2-year, 10-year yield curve, this inverted deeper today to 76 basis points, and the 10-year 3-month inverted to 138 basis points. So the yield curves still remain inverted. So you got to ask yourself what's going to happen if they uninvert. And I say that because just take a look here at the 10-year. This is the yield curve, 10-year, 2-year. And as you can see, as it gets under this red line, which is 0.0, meaning it's inverting, this goes down. What does the SPY do? SPY goes up. This goes down. SPY goes up. This goes down. SPY goes up. This goes down. SPY goes up. And what did you notice here? Well, when this goes down, this goes up, which begs the question, if this starts turning back up at some point, because remember, the yield curve is not going to remain, inverted forever, okay? It's going to have to uninvert at some point. And as you can see here, when we uninvert, so this is the 10-year, 2-year, this is the S&P 500, this is the federal funds effective rate over here. And you can see when it's red, that's inverted. When it's green, it uninverts. And you can just draw a straight line up. Boom, that was the dot-com bubble, right? When we cracked down. When it uninverted right here, boom. Where were we? We're right around the top of the great financial crisis. And now you can see that, hey, we haven't been this inverted since the 80s. So it's been a long time. So what's going to happen and when it happens, I don't know. But just be aware of, hey, if it does uninvert, well, this was a bad time. This was a bad time. And during that same time, what did the Fed do? The Fed was lowering rates in that environment. Now, they said that they're going to hold potentially till 2025, right? So if that's the case, this thing could uninvert in 2024, 2025, and then we might see some more potential pain in the overall market. And you got to just think, right? I mean, it puts pressure on companies and markets when the federal rate moves up this fast and holds for obviously longer. And I know a lot of the market participants really believe that they were going to be cutting a lot sooner, not holding for longer. But if you take a look at right now, the federal Fed, the meeting probabilities, what's futures kind of pricing in? Well, they're pricing in holding it until March, right? March of 2024, and then cutting potentially in the middle of May of next year. So if this is actually the case, right, this means that the market is going to start having to price in the Fed will actually hold rates there for longer. That's why it's going to be important to listen to Jerome Powell on Friday to see if he gives any insight as to potentially what he sees taking place. Like his last meeting, he withheld a lot of information, and it was really just playing it meeting by meeting and so forth. So if we go to the dollar was down on the day. Potential topping tail over here on the dollar as we were pretty big run up, but then it reversed and closed around the low of the day. And as this thing sold off, you can see the S&P 500 took off. So if this thing wants to back off a little bit, it could be very good potentially here for the S&P 500 as well as gold. That big reversal, take a look, right? It was contracting. What happens, right? Markets move between expansion and contraction, and then they expand again. So this one happened to expand to the upside, which allowed for a low risk entry, right? This would be the risk, and then already a 1-for-1 type trade. So is this going to potentially head higher if the dollar comes off? Possibility. It's a nice break on some decent volume, so it's going to be one to watch. Could be a fake out. I don't know. It's not necessarily, if you miss the move, give it some time and just see how it consolidates. Maybe go to the smaller time frames. If you take a look at silver, also this is crazy move today, up 4%. This I would not personally want to chase. I would want to see how this consolidates. But as we stated, this prior moves in silver and the GDX, this black line, right? They track very well. Didn't really quite move, and now you saw the pop in GDX going up almost 3% on the day, outperforming the 11 sectors that actually make up the S&P 500. So if we continue on, copper's also seeing a little bit of a relief bounce. Remember, we kind of sold off, boom, and now we're starting to see a relief bounce. That right there is helping the S&P 500. So we'll see here if any divergences build over time. Oil was slightly down on the day. No surprise there. We kind of stated that with energy down on the day. But this might be potentially just back testing as we're starting to see a 50-day moving average golden crossover take place. That's when the 50-period moving average crosses back above the 200-day moving average. So this pullback might actually lend hand to a bounce or potentially even breaking out of this area. So this could be, boom, could be accumulation, could be a potential cup with handle sort of pattern. So if we start breaking above 85, it might open the door to go higher, which could be very good for some energy names. The last time we had a moving average crossover, the 50 and 200 was the death cross. The death cross is when the 50 crosses under the 200. That led to this bear market territory right here. So we'll continue to monitor this one, see if it pulls back, but it might offer up some opportunities with some energy names if inflation is going to remain sticky and oil is going to go higher. If we take a look at some indicators, right, we have the summation index not really giving us any change in shift or whatever the heck I want to say right now. It's not giving us, it's not turning, it's not, a little subtle shift to the right-hand side, but the parabolic SAR still remains above it. We're below zero. And, we got very overextended. So we're seeing a bounce, right? And now we're getting a reading right here at minus 25 on the NAMO. Okay, so nothing really different there. We're still identified a potential change in trend here. It actually marked the change in trend. And now it'd be really nice to see, obviously, to get more bullish when the parabolic SAR ticks underneath it. Same thing goes with the NYSE summation. The last one was the Nasdaq summation. This is the NYSE summation. It's above zero, but the parabolic SAR still remains above it. And we got pretty overextended. No surprise. So we saw a little bit of a bounce there. Now, if we take a look at the bullish percent charts, I'm going to go through these fast. I just want you to pay attention to the RSI being in that oversold condition still for the Nasdaq composite. The NYSE bullish percent index is in oversold condition. The BPINDU is still in oversold condition. BPNDX is starting to move itself out of it. So if we pull back a little bit deeper, that might offer up a potential bullish divergence. We'll look at that if that does take place. BPSPX chart still remains in oversold condition. Energy, this is interesting, right? We have actually a negative divergence there on the RSI. There's a lot less equities trading in here, but remember, it rotates between sold, overbought, overbought, potentially to oversold. There was a positive divergence here, and that played to this market bottom and this rally, and now we're seeing the opposite. So perhaps we need a little bit more time to breathe in energy names. Financials, we talked a lot about on yesterday's video. They are in that oversold condition on the RSI, discretionary oversold condition. We have a technology sector. This one is bouncing a little bit, right? We talked about that negative divergence here, and now we've got very oversold, and we're starting to see that relief bounce take place. Miners, we discussed this one. This is still an oversold condition here on the weekly time frame. I like to look at this one on the weekly time frame, and we're pretty crushed levels. So we saw that relief bounce today. We'll see if it can create any more positive momentum. I'd like to actually see GDX come down further to kind of just flush people, scare people more, unbeknownst to them, knowing that this might bring even to more oversold conditions. And then we might see some actually, a potential real nice move where we saw like this October bottom and we saw a huge move there, or even like the COVID crash bottom over here, how we went from, under 20 up to 40. So we saw some individual miners go 300+% gains. This is an interesting trend line I want to continue to watch. It's the NIAD, so NYSE Advanced Decline line. It's a cumulative line. And what I'm just noticing here is you can see a high, higher high, a low, a higher low, a higher low, a higher low, a higher low. And it's just really holding this trend. And you can see also the NYSE, New York Stock Exchange, is also holding this trend here. So if we get a little bit of a relief bounce, potentially watch for a high and a lower high to potentially form. This could be a potential head and shoulders, and if we break the neckline, this might create a break in the cumulative advanced decline line, and we could potentially see more further sell side activity in the broader market. Let's hop into the S&P 500. All right, so this is the monthly chart, and we have these dashed lines and these solid lines. I'm going to stick with the solid lines, which are up here and then right here. That is what the options market priced in as far as risk for the month of August. And we pulled these just before the month started. And I wanted to call out that we bounced into the 5 EMA monthly. And guess where we are? We're finding a little relief bounce back into the lower monthly expected move. Remember, 68% of the time, the market, right? 68% of the time, if you think of it as a distribution curve, one standard deviation closes within these expected moves. So as we were getting outside of it, we talked heavily about what? A lot of oversold conditions, and statistically speaking, there's a higher probability that we get a bounce. And well, here you go, we did. If we take a look at the weekly time frame, where did we come up to? We're right there at the upper weekly 5 EMA. That's on the SPX. We're still just actually trading inside of last week's candle. Okay, so it's this right here. This is just consolidation. That's all that is. If we take a look at the daily time frame, I want to call out an area of confluence to pay very close attention to if we get further upside in the S&P 500. And I anchored a volume-weighted average price to the bearish engulfing candle that we discuss as a potential turning point in the market. If you want to rewatch that video and where I discuss it more, be my guest. And you could see we bounced from these levels, we cracked down through it, and it's been holding as resistance. Then we have the quarter to date. As you can see, the quarter to date average anchored VWAP, we are still below it, which means that the average person based off of this time and the volume that's traded since is under the line, meaning they are currently underwater. The average buyer based off of volume from the start of the quarter till now is in the red, okay? And these can act as potential areas of resistance. So I drew this little line out here saying that if price comes up, it's going to be back testing the anchored VWAP from the top of 2023 and the quarter to date in confluence. So this could be a key level. There's still potential more upside, but to watch. And if this acts as resistance and we can't get through it and we get rejected, this could very well form a potential topping pattern known as the head and shoulders. And if we crack through that, that opens the door for further downside to potentially the year-to-date anchored VWAP, which is right there in red. Now, I want to also look at the volume profile that's taking place. As you can see, there's pockets of distribution. What do I mean? This is I believe the 20 period moving average of volume. and you see these red spikes over it, okay? These red spikes are periods of distribution. So there's a lot of sellers stepping in here. So what you want to see now is you want to see volume get tight, and then you want to see, you know, price go sideways or maybe come up here and trade sideways, volume to dry up, and then a breakout candle on stronger green volume. Something like where we saw these consolidations here where volume was tightening up, and then all of a sudden we get boom, 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 and you just got an increasing volume. Then we pulled back on lower volume, and then we started to get breakouts again on higher volume, okay? So that is one thing to pay attention to. It doesn't mean that the market has to go up and volume has to follow. That's not what I mean. What I like to personally see, once again, is volume contracting and price contracting, and then you can look for breakouts on higher volume or breakdowns on higher volume there too as well. So that there's a lot of distribution that took place, so just be aware of that. If we take a look at the 15-minute time frame, all I want to call out here is the expected move. This was today's expected move. Going into today's expected move, we traded outside of it and almost up to the weekly expected move. If I update these levels right now, we're still below that quarter to date, as we've already stated. We're below the month to date. We're above the 5-day moving average, and we've been holding, as stated, the August low anchored VWAP. We pulled into it. That was positive. Price started to consolidate, and then we gapped above the 5-day moving average. So even if price were to come pull down to the lower daily expected move, potentially even tomorrow, that might be in confluence with the anchor VWAP from the low, the 5-day moving average, and potentially even the week-to-date anchored VWAP. So as it stands now, we can potentially start looking for buying opportunities in the on pullbacks, okay? Now, we're not too far from the weekly expected move. I believe that we got outside of it or tagged outside of it on NVIDIA earnings. NVIDIA handles a lot of the market flow, right? So just be aware, NVIDIA is going to obviously play a big role on where we open tomorrow. If we open outside of the weekly expected move, remember, 68% of the time, we close within the weekly expected move. So be aware and just be cautious of potential pullbacks into the level. If you want to take a look at the 2 sigma levels, these are the pink levels, okay? And then we have, and that 95% of the time it fits within this range. 95% of the time it'll close within here. 68% of the time it closes within that range right there. Okay, let's take a look at the Nasdaq 100 on the monthly time frame. It's back within the monthly expected move, bouncing from an inclining monthly 5 EMA, something that we've been discussing. If we take a look at the Qs on the daily time frame, this is obviously one of the more stronger index products, the Nasdaq 100. We had that negative divergence over here in 2021, going into 2022. We saw the bear market. We saw the negative divergence here we called out, and we started to get a pullback, and we're getting a relief bounce, but we're still below that quarter to date anchored VWAP. If we take a look at the Russell 2000, this one is, we see a little bit of relief, but it's still the big laggard as we're trying to reclaim the monthly 5 EMA and the monthly lower expected move. So if we are going to get some sort of relief here in the near future, this could be a very well potential opportunity, but just be aware this has been just the dog of everything so far. As retailers, they've been getting smashed. The financials, right, they haven't been doing too hot. So maybe perhaps it's time to get a little bit of relief from some of these, small banks, KRE, and some of these energy companies too that have been pulling back a little bit as well. All right, if we take a look at the daily time frame for the IWM, I want to call out how it's starting to contract. And you can see that, right, by looking at the all-time high. You have a high, it bounces down to a lower high, a lower high, a lower high, a lower high, and surprisingly enough, that's a lower high too. And then over here on the downside, you have the low, a higher low, a higher low, a higher low, and this is a higher low. So price action is coiling up, okay? So as we're seeing these large swings back and forth and back and forth, what we're starting to notice now is prices contracting. So be aware if we start getting underneath the year-to-date anchored VWAP and break these lows, that can open the door for a shot down to the lows of 2022, which was in October. But if we start bouncing, take a look at the quarter-to-date anchored VWAP as a potential area of resistance. If it doesn't hold, this could also be a potential head and shoulder pattern. But if we start breaking above this level and start breaking through 200, that could be the start of a potential real big move to eventually try to come way up here to that prior all-time high. Take a quick look at the Dow Jones also as well, still above a year-to-date anchored VWAP. The quarter-to-date is starting to turn around, and you can see we're starting to trade around this prior breakout area where we saw this potential. Inverse head and shoulders, we broke out, strong move, coming to back test. We haven't seen the strength follow through yet, but so far it's kind of building itself a little bit of a base. Could be potentially a bear flag, but we're starting to see it hold up at prior areas of resistance. Once resistance is broken, it can become a level of support, and that support is holding. So if we start breaking down under it, watch out for the year-to-date anchored VWAP. If it starts breaking under that, just be careful, all right? That's all I got for you on today's show, everybody. It was quite a bit. See you later.